What are the benefits of opening a self-directed IRA? Quite simply, you have the freedom and the choice to invest in the things that you know and understand and want to invest in. So you're not limited to the stocks, bonds, and mutual funds or what your broker is going to make a commission on. You have a choice to invest in larger scale commercial real estate.
Welcome to CREPN Radio for influential commercial real estate professionals who work with investors, buyers, and sellers of commercial real estate coast to coast. Whether you're an investor, broker, lender, property manager, attorney, or accountant, we're here to learn from the experts.
Welcome to Commercial Real Estate Pro Network CREPN Radio, episode number 121. This is the podcast focused on commercial real estate investment strategies. We do this through weekly conversations with commercial real estate investors and professionals who provide their experience and insight to help you grow your real estate portfolio. Thanks for joining us. My name is J. Darren Gross. Today my guest is Travis Watts with Direct Source Wealth to talk about how to use your self-directed IRA to invest in real estate. Due to some scheduling challenges, we were unable to schedule a call that worked for both of us. So instead, Travis agreed to answer questions I submitted. And to generate some questions, I reached out to a couple of online commercial real estate groups I'm in, and I asked the question, what questions do you have regarding using self-directed IRA funds to invest in real estate? The questions I received were from those who had experienced raising capital and some hurdles they found when investors were using self-directed IRAs. I submitted the questions to Travis, and he answered most of them, and I think it turned out pretty good. In fact, if you like this format, please leave a comment and let me know. Also, this could end up being a way we do this in the future. In fact, if you could click, there's a link we've created. If you could click on the link in the show notes and just answer, it's a 3-question multiple choice questionnaire. And the answers would help us decide if we should do more shows like this. But first, a couple of quick things. If you are on social media, reach out and let's connect. You can find me on LinkedIn, Facebook, and Twitter. You can look me up under J. Darren Gross. That's the letter J, Darren, D-A-R-R-I-N, Gross, G-R-O-S-S. When you do, please let me know you listen to the show. Also, remember, our goal at CREPN Radio is to learn and share. So if you like what we're doing here at CREPN Radio, here are 2 things you can do to help us grow. 1, think of somebody who might like the show. Could be a client, colleague, spouse, maybe even your kid. And use the share button on your podcast player and share the show. The other thing you can do to help us is subscribe to the show. It's free. And you can do this through either iTunes or Stitcher. And when you do, please leave a 5-star review. This really helps show and attract new listeners, and also helps us attract quality guests. And don't forget, if you're on LinkedIn, be sure to check out our group, Commercial Real Estate Pro Network. It's a great place to network with commercial real estate professionals. All right, let's get into the show.
Hey, thanks so much for having me. So, I'm Travis. I work for a company called Direct Source Wealth. I'm a vice president of investor solutions over there. So, what Direct Source Wealth really does is it provides Main Street investors an alternative to the traditional Wall Street system. So rather than having your entire portfolio in just stocks, bonds, mutual funds, dealing with a broker or individuals or advisors that are just getting a commission or a bonus, or they're going to make money because they have assets under management, whether or not your portfolio performs. What Direct Source Wealth really is a group of investors where we're all co-invested together on the same projects, which provides a good alignment of interest and a lot of transparency between everyone, and just allows you to diversify your portfolio into larger projects that may not have previously been available in the past to a lot of people, like let's say a 300-unit apartment complex. And what I've found is that a lot of people don't know that they can take part in projects like this using their IRAs. It does have to be a self-directed IRA, and so that's the topic of today. And I'm happy to answer any questions just simply on the basis of I use a self-directed IRA myself, and most of our clients, I'd say a good 50-60% of them also have self-directed IRAs that they use on the projects we invest in. So before we get started, I just want to say real quick, as a quick legal disclaimer, I'm not a CPA, I'm not an attorney, I'm not soliciting any advice, telling you what to do, or trying to sell you on anything. I'm just simply going to share my experience as a self-directed IRA investor and our clients' experience, some of the things I've seen, common mistakes, and things that can help you. So with that, let's get started. Real quick, we'll do a Q&A. These are some frequent questions that were asked all the time. What are the benefits of opening a self-directed IRA? Quite simply, you have the freedom and the choice to invest in the things that you know and understand and want to invest in. So you're not limited to the stocks, bonds, and mutual funds or what your broker is going to make a commission on. You have a choice to invest in larger scale commercial real estate, if that's your thing, or note lending, if you're just looking for some passive income and higher yields than maybe a 1 or 2% that you might get out of a CD or the bank or a bond. So how to break into the multifamily sector. A lot of people start with one single family rental. Maybe they've got 2, 3, 4 of them. This is certainly how I started. It's probably how most people start in the real estate investing world. So I was one of those people saying, how do I get out of this? I don't want to have 100 little homes everywhere when I'm 90 and I'm running around snaking toilets and doing my own tile work and, fixing sprinkler heads. So this is a great way to branch out and scale up with a self-directed IRA or in cash or a combination of both. The point is, when you work with a syndicator, that's someone who puts a deal together that's substantially large where you've got multiple investors investing together. So I'll give you a real quick example on this. We'll just use some really basic, simple numbers just to get the point across. If you've got, let's say, a 100-unit apartment complex that's available for investment, that syndicator needs to raise some capital to get the deal closed, and you want to take part in that project using your self-directed IRA. Let's say you say, okay, I have $100,000 to invest on that project. I'd like to take part. You then become a 10% owner on the project, right? Because they needed $1 million raise. You put in $100,000, that's 10%. So if it's 100 units and you own 10%, you own 10 units. So that's an easy way to scale up from the single family world. You took $100,000, you now own 10 different individual units in that complex, rather than trying to buy 10 single family homes with $100,000. So why invest in real estate and private note lending opportunities as compared to the bank or annuities or CDs or bonds or the stock market? For me as an investor, I'll make it as simple as I can. This is how I see it. A lot of people know the rule of 72 simply means it's how quickly you double your money on an investment. And what you do is you take the number 72 and you divide it by the interest rate that you're getting on an annualized basis. That's how many years it's going to take you to double your money. So quick example of that. 72 divided by 10 is 7.2. So it's going to take you 7.2 years to double your money. Now try running that number with 1% in the bank, right? 72 divided by 1 is 72. It's going to take you 72 years to double your money. So if you're only starting with $50,000, you're going to end up with $100,000 putting your money in the bank. After 72 years, when you're 100 years old, you're just never going to be able to retire. It's just not a plan. It doesn't make sense. Those low numbers don't make sense. So why real estate? Why note lending? It's not uncommon, even at this stage in the market, to still be getting annualized returns around 9%, 10%, 11, 12% in cash flow alone. So it's just a better opportunity, in my opinion, than the alternatives that we have in this low interest rate environment. So question number one, is there any tax or penalty to move your current retirement funds into a self-directed IRA? Well, I guess the best way to answer that is through an example. Let's say that you worked for an employer, you had a 401k, and your contributions into that were pre-tax, giving you a current tax deduction. And then let's say later you quit that employer, and now you've got this old 401k sitting there. You can do what's called a rollover IRA. You can roll those funds and keep them as pre-tax into a traditional self-directed IRA. Same thing as a traditional IRA, the only difference being self-directed. Now, of course, if you want to get more technical and you want to take a traditional pre-tax IRA and convert that into a Roth IRA or something like that, yes, there's definitely tax implications to that. Again, consult your CPA. But that's not what most people are looking to do. That strategy rarely makes sense to most people. What you're essentially taking is pre-tax money and you're converting it into a different custodian. That's what a self-directed IRA is all about. They're just a custodian. That's somebody who holds your IRA account. So you're just taking pre-tax money from one place and bringing the pre-tax money to a different place. Or you're taking the post-tax money, like a Roth IRA, and you're converting it over to a self-directed custodian, which holds your Roth IRA with them. All right, question number two. How long does it take to set up a self-directed IRA? That could depend. It can be as little as 3 to 4 business days if your money's already settled in cash, ready to go, and you just make a quick, switch over electronically. It could take as long as, a month or two if you have to liquidate out of your previous investments, or if the self-directed IRA custodian isn't able to take in your current investments that you have. You may need to sell them. That can take time to settle. And then, of course, you have to, either have a check mailed or do an ACH or a wire transfer, depending on what your options are. Can take anywhere from 3 days minimum to, a couple months. So consult with both your current custodian where you have your IRA or your 401k and your chosen self-directed custodian to get the best estimate to that answer. All right, question number 3. What documents are required and what documents are required to fund a deal? Great questions, 2-part question. First half of that answer, what documents are required? Just your standard documents to open any retirement account, whether that be just at a traditional holder, like I mentioned, like a Fidelity or Schwab. It's going to be a driver's license or ID, possibly a social security card, things like that. And you're just going to fill out some standard paperwork with your name, your address, and whatnot. So second part of that answer, what documents are required to fund a deal? This will depend on if you're doing an equity deal, which means that you're an owner in a project and you're kind of going to ride the wave up or down, whatever happens with the economy on the deal, or if you're going to do a note lending position where it's basically just you're being the bank. You're creating your own bank that becomes your IRA and you're loaning money out to an individual or to a project. Typically what you see is an operating agreement. You've got a private placement memorandum. You probably have something like a pro forma kind of showing you what the projections are for the particular deal that you're investing on, what your anticipated returns might be. And in essence, these are just your typical legal disclaimers for the most part, how the project's going to operate, who gets what kind of fees and structures like this. So every deal is going to be different. It's difficult to take that question and answer every side of it. So you'll just have to basically find a syndicate group or an investment, and you'll just have to get those docs, read through them, and ask any questions you have to the staff or to the syndicator themselves. All right, so for the next question, once the funds are invested and the investment generates returns, what happens to the investment returns and the distributions? Do they compound in the account? Can they be invested in the next deal? Can I take the distributions? All great questions, 3-part question. So we'll take it one step at a time. So what happens once they're invested and some money starts coming back? All right, so this is important to note. In an IRA, when the distributions happen, they must be sent back into the IRA, not to the individual that owns the IRA or holds the IRA. Okay, because that will then be a taxable event, and that's where you could run into the tax situation, the penalties, things like that. So let's say we'll use a simple example. You do a note lending investment. That investment pays you 12% annually, so that's 1% a month. Let's say you invest $100,000. So month number one, here's $1,000. Comes back into the IRA, and it sits in just a cash portion inside of the IRA. Month number two, $1,000 comes in. It also just sits in the cash portion of your IRA. So at the end of the year, you're going to have $12,000 there in distributions, at which time you could reinvest that if you can find another group or deal to invest it in that will accept $12,000 as a minimum. But the key here is just to keep in mind, generally speaking, with IRAs, whether that's a traditional or a SEP or a Roth, the IRS, doesn't want you taking any money out of that personally until you're age 59 and a half. That's what the laws are today as of now. And then at age 70 and a half, they do have a clause where you must start taking distributions at that time from anything that is pre-tax money, because they want to start getting their revenue out of it. If it's a Roth, you don't have to worry about the age 70 and a half. All right, moving on to the next question. Can I use a self-directed IRA to purchase a property I buy for my own investment, lend money to others for real estate investment, invest in a syndication that I'm a general partner in? Also, great questions. We'll take them one at a time. So, number one, can I purchase a property that I buy for my own investment? Short answer, yes, you can. Longer answer, there's a lot of rules and regulation around this one. It can be very tricky. And part of the benefit of having a self-directed IRA and that being your custodian is that they can help you look out for your best interest, right? So if there's something that is going to cause an issue or a taxable event or a penalty, they're there to help guide you through that and make sure that you don't make those types of mistakes. There's a lot of rules around, you can't personally manage the property. You can't personally, put your own money into the property to fix it up. It has to be done by third parties, property management companies, things like that. Again, we're digging into that territory where it's please consult your CPA or tax advisor, unfortunately, on that question. But, to answer the others and shed some more light, can you invest in a syndication? Absolutely. And that's what all of our clients do at Direct Source Wealth. Syndication just means it's a group of investors, maybe 30 people, 40 people, maybe even 50 people, investing together on a large project. Everybody's kind of deployed their own amount of capital. Some people have put in $50,000, some people have put in $200,000 a piece. And so your percentage of ownership is different among everybody that's in the deal. This is a completely hands-off approach, which most of our investors love. I personally love. It's professionally managed with property management companies. There's nothing that you have to do in person. This is just a set and forget type of investment. As you have a team, a professional team working behind the scenes on the project at all times. And that's the beauty of it. It kind of gets you away from the landlord scenario into being able to scale your real estate business or your real estate passive income. And the last question was, can you invest in a syndication that you're a general partner in? Again, short answer, yes. Longer answer, it gets pretty sticky. So make sure that you're consulting the right folks to give you the legal advice in that scenario according to your situation. So just as a last minute thought, I do recommend everybody at least look into self-directed IRAs. Just get the base knowledge around them so that you understand what it can do for you. If you're the type of person that's not happy with the returns in your IRA because you're invested in things that are a low yield at this point, or you'd like to take more of a hands-on approach, get involved with real estate, scale up into multifamily or commercial, do a little bit of note lending, or just diversify. It's got a lot of purposes for a lot of different people for a lot of different reasons, but ultimately it comes down to what's right for you. And if you prefer to use your broker or your financial advisor in the paper asset world and be hands off that way, turning it over to them, that's probably the right solution for you. If you have any further questions about self-directed investing, or if you want to learn more about Direct Source Wealth, what they do, website is www.directsourcewealth.com, as in directly investing at the source to build your wealth.com. To find me, my name's Travis Watts. I'm Vice President at Direct Source Wealth. I'm all over social media, LinkedIn, Facebook, or just at Travis at directsourcewealth.com. So again, thanks so much for having me, and for all the listeners out there, best of luck to you and your journey of passive income and financial freedom and retirement. Take charge of your retirement. Take action. Learning is earning. So go ahead and reach out to your legal advisors, your CPAs, and some self-directed IRA custodians.
Well, that's all we've got this week. I hope you like the format and the topic. If you like the topic and what Travis had to share, be sure to use your share button and share the show. Remember to click the link in the show notes and take the 3-question survey. Again, your answers, it'll take you a minute to take the survey, but your answers will help us a bunch and let us know if we should do more shows like this. Remember, the more you learn, the more you earn. And until next time, thanks for listening to Commercial Real Estate Pro Network's CREPN Radio.
You're listening to CREPN Radio for influential commercial real estate professionals. For more information on this or any of our guests, like us on Facebook, CREPN Radio.